What's going on, everybody? Mark Fleetwood here. Welcome back to your Daily Grind Trader. With Bitcoin acting like a tired parent who was just ready to give in to their whining children, I'm going to show you why the Bart Simpson pattern is showing me that I think we are going to go further into the depths of a bear market. So stay tuned. I'm going to tell you all about why this is going to happen. Alright everybody, you know the drill. I'm not a financial advisor. This is not financial advice. I simply share my technical analysis in hopes that you use them as you see fit. But remember, you manage your own money and you manage your own risk. With that being said, we're going to hop into the charts. And we're going to take a look at the current price. The current price right now is sitting at 42, 236, 231, 232. Obviously the current price is always moving. But what we had here, we had, a test of the trend line. And we failed and went down. This was our lowest low so far. This was the lowest low that we've had at 33K. And then we tested the trend line again and we failed. And then we tested the trend line again and we broke through. And this was almost like a straight line up through. And then we went totally sideways. Now we're in a chop. And in this chop, we could see upwards of like a 42.5, 43K, maybe 43.5. We could go up to about here. But nonetheless, it will be choppy. It will be primarily choppy here and primarily sideways. This is the part that I was talking about with the tired parent. This is the tired mother. This is the trying to get things done. We're going to go bullish and we're going to get some stuff done. And the kid starts to fight and whine and complain and all that stuff. And then you're left with doing nothing but watching Bubble Guppies or watching SpongeBob or whatever it is the kids watch these days. It's going to be the bears, I believe, are going to win out. The bulls are, even in the Arun index, the bulls are starting to come down off of their strength. The bears have been down for a little bit. They are going to start to pop back up. In this type of market, the bears aren't staying down long on the Arun. They will pop back up. And we actually already have some bearish divergences. On the bigger picture, we have a hidden bearish divergence from this peak price. The last time it touched without breaking, this peak price was an RSI of 62.48. And then after it broke out and rose up, we had an RSI of 76, which is a much higher RSI, but a much weaker price. That is a hidden bearish divergence where it took that much more energy, it took that much more strength to get to actually a lower price point. The price went up, but it wasn't able to reach the price it was prior at a lesser strength. And then when it did finally get up here, this is a regular bearish divergence because the price went up but the strength went down, which means that it already kind of blew everything they had. This was them yelling and screaming and getting everything they could, and then they just couldn't make it any farther. So now the price went up a little bit, but the strength went down. And I think with that being said, we're going to see a little bit of a downturn. And we're going to keep sideways for a little bit. I think it's going to be sideways for another few days until finally the bears went out and we kind of plummet. There will be a plummet of a price, something along this line. And I'll go back and show other times this has happened because it's going to actually identify a flaw in my prior logic in the way that I was charting this. So from the all-time high, we had this lower high, and this actually really kind of started the trend line because this was the first rejection of making a lower high. This was the first kind of sign of a downturn. And then we had our lower low and then another lower high where we touched the trend line again and couldn't break it. So now you got 3 touches on this trend line, and then the 4th touch broke it out. But again, this was the straight line up and then go that sideways chop. And if you filled all this in with yellow, it would look like Bart Simpson's head. And this is the Bart Simpson pattern. So straight line up, choppy, choppy, choppy. And again, you get some of these spikes. You get some more kind of this high level spike here where it would bend down and then it kind of looks like the bulls are making another run, and then once the chop is done, it falls, it comes down. So this actually did break that trend line, and now we've got a new trend line. Second touch was good, came down and then touched the 3rd time and broke out. Straight line up on the breakout, and then choppy, down, up, choppy, and then a downward move, a strong downward. The bears won this move. And again, here from here to here, You got upward price, but you got downward strength. You've got a lack of strength, but we've got a new trend line. So now a touch here, a touch here, a third touch here, and our fourth touch is when it broke up. It broke up, and we're getting our choppy. So this is going to be our third time in the Bart Simpson pattern with a straight line breakup, a break of the trend line, a break straight up, and then just totally sideways. Cannot maintain the break, cannot maintain strength. The bulls are tired. They're trying, they're fighting, but they can't maintain strength, and they're not going to win. The bears will win this out, and the fight for the bulls will just be a battle of attrition, in which case is going to be just how long can they hold this price sideways before the bears take over and dump it. That is going to be the battle for the bulls, is how long can they hold on to a sideways price action at this point. And if I'm wrong, what will have to prove me wrong is going to have to be a break of the 200-day smooth moving average. So we're not that far off. We're around 44K, but every time we've gotten close to it, we've rejected off. We've rejected off, and I can see us rejecting off here if we get close again. And what would have to break even farther than that would be the bull market support band, which currently, the last time we touched it was on this attempt to break out at 52K. We got back into the band, but couldn't break through the band, and then we rejected off harder. We've been farther and farther away from the band. It's the farthest we've been away from the band in a long time. So, I mean, to get back into a bull market completely, to say we're back in a bull market would require us to be above 51K at this point. And that's a massive move. That's another 10K here off of where we're at now, essentially. And that would have to be a 20% upswing. So that's going to be quite the tall task to get back into a bull market. I don't think we break the 200-day smooth, but if we do, and we break into the bull market support band, then we'll be talking about, are we back? Are the bulls back? Are we back in action? But until that point, we got to assume that we're staying bearish and assuming that we're just making another new downward trend line. So with that being said, guys, that's the video for today. I hope you enjoyed. I hope you got some laughs out of it, but also some information. So, as always, guys, until next time, peace.